Hello, my name is Taylor Lapidus. I'm with the Precision Team, Keller Williams, Arizona Realty. Thank you for watching our blog. Today we're going to talk about two standard clauses in the Arizona purchase contract and in most contracts throughout the nation that protect the buyer and their earnest money deposit. First clause we're going to talk about is the finance clause, or the loan contingency. When a buyer is purchasing a home, they often get a loan from a bank or some other lender, and the purchase contract they submit to the seller is contingent upon them successfully obtaining that loan. Meaning that if for whatever reason their loan doesn't come together by the time the transaction is supposed to close, they don't have to show up with a briefcase full of cash. They can just cancel the deal, get their earnest money back. The key is that they have to, in good faith and with diligent effort, try to obtain the loan. But in the end, regardless of the reason why they couldn't, they've got every right to cancel this contract so long as they provide written notice within the time allotted as per the contract. Now, for Arizona, it says simply that the buyer must give notice by close of escrow, by the closing of the transaction. In other states, they do have specific timelines, saying maybe 20 days after the date the purchase contract is signed by all parties. It varies. And again, everything is negotiable. It does not count as part of this loan contingency to not have your down payment. If a buyer doesn't have their down payment, or if a buyer doesn't have the other funds necessary to close to cover their closing costs, well, number one, they're not going to be able to get the loan. They're not going to be able to close on the property. Number two, this loan contingency does not protect them, because technically they've qualified for the loan. They didn't have the cash that they said they were going to have to close is a separate issue. And in that situation, the sellers would have the right to pursue the buyer for that earnest money. The other contingency I want to talk about real quickly, and it's tied in, is the appraisal contingency. And most contracts, again, are going to have this. What this says is that the home will appraise for the purchase price. That simple. Now, for a buyer, if the home doesn't appraise for the purchase price, they can get their earnest money back. They also have the right, though, to move forward with the terms as they are and bring the extra cash to closing. As well, it is an opportunity to renegotiate, in theory, where the seller and buyer could come to a new meeting of the mind, maybe lowering the purchase price to meet this new appraisal contingency. My name is Taylor Lapidus. Thank you very much for watching our blog. Have a fantastic day.